All right, so chapter 5 and 6, periodic inventory, purchases, and sales, okay? So here we're doing a full blast exercise that includes all the concepts we learned in chapter 5 and 6. Now, in this case, what I want you to get away from this is a pre-notion to what's going to happen in the last 5 weeks of class, right? This is going to be an example of what would happen when you're constantly selling, constantly purchasing, and dealing with customers as well as the vendors, right? So this is what happens in real life when we are properly taking the time of becoming a bookkeeper, is that you're going to be constantly recording journals. Now, in this case, this is a combination of chapter 5 and 6, right? Because if we have to journalize a transaction, we also have to use a inventory worksheet. So in this case, this is going to be practice for the class, right? For the last 5 weeks of classes, that we're going to combine all the concepts together and we're going to practice journalizing one transaction after another, depending on what it is, okay? So in this case, what I want you to do here is you are going to practice journalizing. So I got a couple sheets here for you. And of course, we also have an inventory worksheet for you, okay? So here's your journal, and here's your inventory worksheet. Okay. So now we're going to go ahead and take a look at our scenario. So in this case, okay, your inventory method is periodic and it's LIFO. Okay, LIFO. Okay, so assume that sales tax is 8.25%. So if on May 1st, okay, we end up purchasing 500 brown mugs at $2.65 each, okay? And the freight costs you $100. Now, of course, you put it on an account from Cuppy's Co. And again, terms are 5%, 15, net 30, okay? So in this case, you purchase 500 brown mugs at $2.65 each with a freight of $100. In this case, let's practice journalizing first. Okay, so on your inventory, on that worksheet, you should also have a chart of accounts. Okay. Okay, so here is your chart of accounts. Okay. So go ahead and use the 7 steps of transaction analysis. We already recognize that a business transaction has happened, right? So here we're on step 4, 5, and 6, right? Or 4, 5. So 4 is determining which accounts exist on your chart of accounts. And then step 5 is to determine the debit and credit system. Okay, so in this case, I purchased 500 units at $2.65 each, okay, with a freight of 100 for periodic inventory. So what am I going to use?
Your purchase expense,
Mm-hmm.
freight expense,
Mm-hmm.
and sales tax payable.
Was there sales tax charged?
I believe they said we're doing the sales tax at 8.25%.
Now in this case, that is for customers only.
Okay.
Mm-hmm. And we're placing it on an account. So what does that tell me if I place it on an account?
Payable.
Accounts payable. Good. So I'm going to practice journalizing first. So accounts payable is 201. We got 511 and 551. So today is May 1st. We got a purchase expense. Okay. Now, if we purchase, let's see. We purchased brown mugs for $2.65 each. So rule of thumb here is you would identify who you purchased it from. So we purchased it from Cuppy's Co. And we purchased 500 mugs at $2.65 each. Okay? And they also gave us terms. They gave us a 5% discount if we paid within 10 days. If not, the entire bill is due in 30. Okay? So how much was my total purchase expense? We know freight was 100. So how much is my total purchase expense if I purchase 500 units at $2.65 each?
$1,325.
Good. $13.25. So in this case, your grand total is going to be $14.25. Okay. Now that I journalized it, I can now go ahead and plug it into my inventory worksheet, right? So in this case, what's my total purchase price? You just gave it to me. $13.25
Yes.
plus 100. $14.25. So now I'm using LIFO. Can I calculate my cost per item?
Yes.
Yes, so then what is my cost per item going to be? How do I calculate my cost per item? $14.25, my total cost, divided by my quantity of 500.
$2.85.
$2.85. Okay, even. Awesome. Okay. So then May 5th, right, you end up returning 15 broken mugs for a full refund. So May 15th, May 5th, you returned 15 broken mugs for a full refund. So what accounts am I going to be using?
Sales, returns, and allowances.
Am I the seller or am I the buyer?
I'm the buyer.
You're the buyer.
Oh, purchase, returns, and allowances.
Purchase, returns, and allowances. So 556. Okay, what else? How did I pay for it?
On account.
On an account. So that means the money is going to go back to my account. Okay, so accounts payable. Now, if I'm returning, right? $15 broken mugs. At what price is my mugs at right now? What did I buy my mugs at?
$2.65.
Good, $2.65 each. And what are you getting? You're getting a full refund. Okay? How much money should you be getting back?
$39.75.
$39.75. So let's go ahead and figure that out in my inventory worksheet, right? Here, I know I'm going to return 15 of them. Right now, they cost me $2.65, right? So therefore, I should get a refund for the $39.75. Now I need to build my goods available table because now my inventory has been affected, especially the first one, right? I no longer have 500 units available. Right? Because for my first batch of inventory, when I purchased it, I purchased 500 of them, but I end up returning 15 of them. Okay? So I should have now 485. My total cost, right? If I started with $14.25 and I got a refund for $39.75, I'm going to have now $13.85 and 25 cents. Okay? So now I got a new total cost and a new total quantity. I also now need to resolve for my cost per item. So in this case, now that after it got my refund issued, how much is my cost per item now? It's 2.856186. Okay, so it rose in price. All right. So then for that very same day, you also end up selling 10 mugs for $9.99 each for cash. Okay. You sold 10 mugs for $9.99 each for cash. So what accounts am I going to be using?
Can you repeat that again?
I just sold 10 mugs for $9.99 each. Right? You sold 10 mugs for $9.99 each for cash. What accounts am I going to be needing to use?
Okay, you be cash,
Mm-hmm.
sales,
Sales, good. 406, or sorry, 401. And what else does you normally have to do when you sell a product in your store?
okay, do you have like sales tax payable?
We'll take a look. Yes, you do. It's account number 230. Okay? So there you go. All right, it's perfect. You received cash. You sold something. And you had to charge sales tax. Okay? So in this case, if you sold each mug at $9.99 each, how much is your total sales? Sorry, wrong one. You sold 10 mugs at $9.99. How much is your total sales?
That'll be $99.99.
Good. How much tax are you going to collect off of $99.90?
What was the sales tax?
8.25%. How much tax are you going to collect off of $99.90?
Okay. $8.24,175.
So how much tax can you charge? How much can you actually charge?
The 8.24.
Yes. Yes, you can't charge 0.5 cents or 0.10 cents in this case, right? So in grand total, I should be receiving a total of $108.14 worth of cash. Okay? You don't need to put how much you sold it for because you're the store owner, right? Or you're selling the product. You should know what your sales price are. Right? So in this case, all right, question to you now. Do I need to update my inventory?
Yes.
Why?
Because you made a purchase.
I did not make a purchase.
Oh, okay, you made a sale.
You made a sale, right?
Right.
Do I need to update my inventory for that?
Yes.
Why?
Because your sales decreased your inventory that you had at the time.
Okay. Am I using periodic or I'm using perpetual inventory?
Periodic.
And what's the rule of periodic inventory? When do you update your inventory?
At the end of the month.
Good. So in this case, is there a spot where you can put your sales in here?
Cost of goods sold.
Cost of goods sold, but when do we calculate that?
At the end of the period.
Are we at the end of the period?
No.
No. So what do you do with the sales? You do nothing, right? Because you're not going to update your inventory until the end of the accounting period. Okay? And when do you find out how many items you sold? You have to take a physical inventory account, right? Where you're going to count every inventory item and you are going to assume that every item that's missing is going to be every item that you sold. Okay? So in this case, you don't need to keep track of your inventory. You only keep track of what you buy. Okay? So there's that one. So on May 6th, you end up selling 20 mugs at $9.99 each to customer A on an account. And you gave customer A 10% terms if they pay within 10 days. If not, the whole bill is due in 30 days. Okay? So in this case, you sold 20 mugs to customer A on an account.
So accounts payable.
No, because you don't owe anybody. A customer owes you now.
Oh, accounts receivable.
Correct. What else do I need to include? I sold to customer A, right?
Mm-hmm.
So
Sales.
sales. and sales tax. So in this case, I'm going to address that I sold to a customer, customer A, and I'm going to give them a 10% discount if they pay within 10 days. If not, the entire bill is due in 30. Okay? So if I sold 20 mugs at $9.99, what is my total sales?
$199.80.
Okay? So how much sales tax am I going to collect from my customer?
And what was the sales tax?
8.25%.
$1.64835.
Okay? 1648. So therefore, I should be collecting a grand total of $216.28 worth of cash. Or in this case, not cash. That's what customer A owes me. Okay? And they have, if they want to take a discount, they have 10 days to pay for it. If not, they have to pay me at the end in 30 days. Okay? So that's it for May 6th. May 8th, okay? You end up purchasing an additional 250 mugs at $2.75 each, with a freight costing you $50. Okay? And also, you place it on an account from Cuppy's Co., and they gave you another terms for this batch of inventory: 5% if you pay within 15 days. If not, you owe them in full in 30 days. So in this case, I purchased another 250 mugs at $2.75 each, with a freight of 50. So in this case, I'm going to go ahead and plug into my inventory worksheet so we can put that in there. 250 at $2.75 with a freight of 50. So what's my total purchase price?
$687.50.
Okay. Plus $50. $737. So in this case, what is my total cost per item? So if I have if I have $737.50, and I need to divide it evenly through 250 units, what is my cost per item? It should be roughly about $2.95 each.
Yes. $2.95.
Okay. All right. So there you go. We can journalize this. You got $687.50, and you got $50 worth of freight to give you a grand total of $737.50. Can copy a journal that we've already previously done. Okay. So that gave us, what was it, 687.50. We got $50 worth of freight, so therefore we owe $737.50. We already plugged into our inventory worksheet, so let's see what happened next. So that very same day, you end up returning 50 of those mugs because they were the wrong color. They end up being black coffee mugs. Okay? So then Cuppy's Co. said, oh, there's nothing wrong with those cups. You can sell them to your customers. They're perfectly in good condition. So they offer you a 15% discount. And of course, you agreed and accepted it. Okay? So you're keeping the black coffee mugs, right? And also taking the 15% discount because that's their way of reprimanding for their mistakes. Okay? So 50 mugs, and you're going to get a 15% discount. So let's go ahead and figure that out in my inventory worksheet. Okay? Am I really returning anything?
No.
No. But which batch of inventory am I referring to?
Would it be the 8th?
The 8th, right? Usually, again, rule of inventory is that once as soon as you receive the inventory, your job is to open up every single box to ensure that it's the correct items, so on and so forth. So in this case, I just received the item. It's going to be the most recent one of the $2.75. Now, in this case, I need to figure out what my allowance is because I'm not getting all my money back. I'm only getting 15% back, okay, off of what I am trying to return. So I'm trying to return 50 of those mugs at $2.75 each, and I need to calculate how much 15% of that is. So how much is my total refund?
$20.63.
$20.63. So therefore, I need to adjust my inventory again because in this case, I purchased all 250 units, but I didn't return anything, right? But I did end up getting a discount off of 50 of those mugs, right? And that discount was $20.63. So therefore, I have a new grand total of $716 and 88 cents. Let me recalculate that. 737.50 minus $20.63. Yes, there you go. So therefore, my new cost per item is $2.8675. Okay. So now I need to record my my refund for that $20.63. Again, we have a purchase returns and allowances for that same day. Okay. Okay. So let's see, that was 275 times 50 times 15%. Your $20.63 back. Okay. Okay. So then May 10, you end up selling 30 mugs for $9.99 each for cash. So you just made a sales for May 10. For cash. So here, we've already know what a cash sales does. And this is for May 10. Okay, let's see how many items we sold. May 10, we sold 30 mugs for $9.99 each. Okay. So how much is my grand total sales if I sold 30 mugs for $9.99?
$299.70.
Okay. How much sales tax am I going to collect off of the $299.70?
$24.73.
Good. So I'm going to collect a grand total of $324.43. Okay. Once again, do we update this in our inventory?
At the end of the month.
Yeah, not now, later. Okay. So then May 12th rolls around and you end up selling 60 mugs at 9.99 each to customer B on an account. Terms were also given 10%, 10 net 30. So we end up selling another 60 mugs, but this time to customer B. Okay. So we sold to a customer on an account. So we have an account receivable, and because we sold, okay. This time we sold 60 mugs to customer B on an account. We gave every customer the same terms of a 10% discount if they pay within 10 days. If not, they have to pay in full in 30 days. Okay. So in this case, how much was my total sales if I sold 60 mugs at $9.99 each?
$599.40.
Okay. And then sales tax. How much sales tax would you collect on that?
$49.63.
$49.45 I got. Let me recalculate that.
Yeah, I put an 8 instead of the 5.
Okay. Okay. So in grand total, customer B owes us $648.85. Okay. And we reach the end of page 1. So that's we're going to start on page 2 now. Okay. So then May 15, customer B decides to return 30 of those mugs for a full refund. Okay. Maybe they realized they bought too many cups, so they decided to return some cups. Okay. Okay. So in this case, a customer B wants to return 30 of those mugs for a full refund. So let's take a look at my chart of accounts. What am I going to be doing?
Sales returns and allowances.
Sales returns and allowances, which is 406. Good. Now, how did customer B pay me?
I think she did on account.
Yes, so therefore, because they never paid me at all, we're going to reduce his account by how much the refund was for. So we're not going to give the customer money. We're going to reduce the amount that they owe us. So 103. Okay. Good. So we got A, sales returns and allowances. And we have to reduce. What else do we have to give back?
The tax.
Yep, sales tax payable. And then we can go ahead and reduce their account. Okay. So that's 406, 230, and 103. Okay. Now, customer B returns 30 mugs for full refund. Okay. So, if customer B is returning 30 mugs, how we charge originally our mugs at 9.99 each, right? So how much is his total sales refund? Like, how much is it going to get back from the product?
$24.72.
Were you calculating the tax?
Yeah.
Okay. Okay. So then in grand total, how much am I going to decrease his account by? $324.43. Okay. Now, what do I do with these coffee mugs? If they're if the customer's returning the product, what do I do with that coffee mugs? The customer's giving it back to us, right?
Yes.
So then what should I do with it? Should I put it back into my inventory or what? Is that a yes? Is that a no? You can say, I don't know.
Could you repeat it for me again? Repeat the question for me again.
So in this case, right, you just sold to a customer, right? Now this customer is returning the product back to you. They are actually returning the actual inventory item back to you. Do you update your inventory, yes or no?
Yes.
Why?
Because your product was given back to you.
Did we ever keep track of the sales in the first place?
Yes, we did.
Let's ask that question again. Did we ever kept track of sales in the first place?
No.
No. The inventory worksheet is strictly only used for purchasing. So in this case, even if I sold to my customers, I never kept track of it in the first place. So even if they give me back my product, I won't find that out until I do my inventory worksheet because that's the rules of periodic inventory. You don't update your inventory for sales. You only update it when you have purchases. Because we need to know how many cups in overall do we have. And when that person goes down to the basement to go check out the inventory physical count, right? Then they'll tell me, well, you have X amount of cups left. And that's going to tell me, okay, my assumption is I must have either sold the items. Now, again, in real life, you would never do that. If a customer returns your product, you would never dump it back into your new inventory. You would put it in a separate account for refurbished, used, open packaged items, right? But in this case, for this concept, I just want you to understand the general idea, right? So in this case, the mugs are still in good condition. Yes, we technically do put it back into inventory, but because we never kept track of the sales and those are items that we sold, we won't know until we find out at the very end because we never kept track of sales to begin with. So whether we did sell those items, it's as if those items are still gone, right? And we never kept track of it. Okay, so that means the person is going to go down to the inventory basement and it's going to tell us, well, you have X amount of cups left. So if that's the case, and you're going to make the assumption that, oh, okay, whether or not those items are used or whether or not those items are brand new, we won't calculate it till the very end. Okay? All right. So then also that very same day, right after we return the product, we also end up selling 25 mugs for $9.99 each for cash. Okay. So again, we actually have this transaction, right? We sold 25 mugs for 99.9 each for cash. Okay. Here we go. So we had a cash sales. Same day, the 15th, right? But we end up selling 25 mugs. So in this case, sales. How much did I sold in general? I sold 25 mugs at $9.99. How much is my total sales if I sold 25 mugs at $9.99?
$249.75.
Good. So then how much tax am I going to collect?
$20.61.
2060. What's the decimal place after the 0?
Oh, okay. It was 4-3.
Yeah, 4. 4 doesn't tell you to round up.
Yeah.
Okay. All right, and then so then I should be receiving a grand total cash of $270.35. Okay. On the 18th, okay, we'll do one more, and then we'll go take a break when we hit the last of the 18. Okay, so May 18, customer A decides to pay in full with cash. Okay, now we're receiving a payment. So let's actually take a look at when we actually sold to customer A. Right? So we sold to customer A quite early on, right? We sold to customer A on an account on the 6th of May, Okay. Now, in this case, that's the 6th of May, and customer A seems to not have returned anything. So in this case, if customer A did not return anything, that means they're paying for the full price of the 20 coffee mugs, right? But we also gave customer A a discount. Did customer A meet their discount terms?
Yes.
Well, how many days is 10 days from May 6th?
Oh, no, he didn't.
Yeah, because in this case, right, they're paying on the 18th. They barely missed the discount due date. So in this case, unfortunately, we cannot give customer A discount because they missed it. So that means regardless of how many days that they have left, they still have to pay in full. So let's take a look at the journal, right? If we sold to customer A on the 6th of June, right here, customer A, how much does customer A owe me?
The 216.28.
Yes. Okay, good. So therefore, that's exactly what I'm going to record is they're paying me. Now, how do I record a payment? Right? What did they pay me with? They paid me with cash, right?
Right.
So what am I? I'm going to recognize that I'm receiving cash. Right? And I'm going to recognize that I'm going to decrease the amount that they owe me. Right? For that 216, where was it? Accounts receivable here for the 216 and 28 cents. Okay. And then I can go ahead and say customer A has paid in full. Okay. No discount because they missed the discount due date. So again, does a payment affect my inventory?
Yes.
Why? I already sold the items to them. What does a payment do? I've already recorded that I got my sales.
It would, wouldn't it decrease the inventory?
Well, we already sold the item to them. We sold it to them way back in on May 6th.
Okay, so you won't, so on that, the sixth, inventory would not show up until the end of the month. They showed that it was sold.
Yes, because we're on periodic inventory. But at the end of the day, you're not going to give your product, an imaginary product to your customer, are you?
No.
You're just not keeping track of it, meaning, oh, okay, so we sold something, we just grab it off the shelf and give it to the customers. We're not counting how much in grand total we're selling. Make sense? All we know is, okay, yeah, we have a box left in the basement. We have a box left. I know that much. How many is in the box? I don't know. But of course, we're gonna restock our shelves, right? So whatever we see on the shelf, that we could say, yeah, sure. So in this case, we're not really keeping track of it. So at the end of the day, when we sell our items, it's gone. It's off our shelves. But we're not counting how many we have left. Make sense? We're only counting how many we sold, right? So like for instance, right, if I'm restocking my shelf, I know I have 30 on my shelf, right? And the customer decides to take all of it. Well, okay, I know I sold 30 of them, but at the end of the day, do I know how many I have in the back? Not necessarily. I know I purchased like maybe 250 cups.
Right.
But that's the most I know. I got 50 cups in the back. But am I actually keeping track of it? No. So that's the idea here. So when I sold my product to customer A, I already recorded that I got rid of the coffee cups and that it's gone. It's sold. So in this case, this is just a payment. What does a payment do? Well, you got cash for it. So in this case, this transaction does not affect anything, not even including inventory, because a customer is just paying for what they owe. That has no linkage to the actual sales itself, because I already recorded that I sold the product to the customer and I already gave the product to the customer. And I'm just telling them, hey, you owe me money. Okay? I let you take the product ahead of time, but you owe me money. So in this case, that's what this person's doing now. They are now making a payment. So again, that has no linkage to inventory whatsoever, because now they're just paying for what they owe me when I already sold the product to them way back on the 6th of May. Okay. All right. So last but not least, okay, that very same day, you also end up selling 50 mugs for $9.99 each for cash. Okay, you sold 50 mugs for $9.99 each for cash. So again, another cash sales here. Okay. This time we sold 50 mugs. Okay. So, what's my grand total sales?
$499.50.
Okay. Tax.
$41.21.
Yes, so grand total, you received $540.71. Okay. So I am going to stop here. So when we come back, we'll continue on starting on May 20th. Okay. So right now, let's see.